You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
I'm Bill Powers. Thanks for tuning in to Mining Stock Education, and we're doing our monthly check-in with Nick Santiago of InTheMoneyStocks.com. And after our last interview a month ago, I was chatting with Nick and I said, hey, how about next time you come on the show, we display some charts and you talk us through some charts that are pertinent to the mining sector and the commodity sector. So that's what we're going to do. You're going to get Nick's professional analysis of what's going on in these charts. Keep in mind, Nick, we're not talking about the fundamentals of the ETFs or the companies that we're going to be looking at the tickers here. This is purely a chartist view. I know some of you don't like that, but many of you do like that. So we're going to glean from Nick's experience over the course of these next minutes. So Nick, welcome back onto the show. Let's start off with VIX. Could you pull that one up? Now you have said that the VIX, the volatility index, would be the best play of the year. Talk to us. Where are we at right now with this play?
Yeah, so we have a chart up here of the VIX. This is the daily chart, and you're going to see that we've made a series of lower highs. In January, we had a really good move up, as you can see right here. Since then, it has gone lower and lower. So I've been wrong on this. We did have an exceptional pop in January. I thought we would get another one in March. That didn't happen. But what it's doing here, it's putting in a very strong pattern. And I'm going to show you, if you just connect these lower highs over here, you're going to notice that when that happens, that's what we call a coiling. And I think right now we're still not there yet. If you notice here today, we had a big surge this morning. And now you have what we call a tail candle or a topping tail. And you'll see that this has probably got one more leg lower to go. And then I think the VIX is going to be the trade of the year, to be honest. Anytime you see stocks like this is a little bit of a different type of equity because it's a spike index. What it will do is it will just spike and then it will collapse. And you've seen that numerous times, even going back to October of last year. And what we have here is lower highs. So when this breaks the preceding high with volume, this is going to be off to the races. I think the VIX by later this year is going to be somewhere north of 40, possibly even as high as 50. So I would get ready for that. It's not ready yet. I know a lot of my email box was ringing this morning when the Dow futures were down over 500. But I said, sit tight. You got to let the charts tell us a little bit more information. I've worked out calculations for this, but I still think we have lower to go on the VIX before the big move comes.
And you trade these spike ups too, we should note, right? This isn't a buy and hold stock.
No. This is something you hold generally for several days when it does make the move. It's a very difficult equity to trade because you can see your move usually is 2 or 3 days long, and then you have to run. Sometimes, like we saw during the coronavirus panic, it lasted a bit longer. It lasted several weeks, but it's generally going to be, the length of it will be around a week or so at most, and then you got to get out of it. So when you see that parabolic move, that's your signal to get out. You may not catch the top, but as long as you catch a good gain, that's what trading's all about.
And what would be your favorite volatility ETF?
Well, I don't like any of them. I think they're all a little bit skewed. I think the VIX index futures are probably the best, but if you can't do that, you're going to want to try and trade VXX. And you're going to see that's the best one. I think it's the least skewed, but they all have the leverage products, especially, are definitely skewed. You got to be very careful with them. Now, if you nail them, you can make a lot of money, but they come with extreme risk. I think the VXX gives you the best of both worlds there. You're going to get a really good reaction. So I'll be doing this both with call options as well as buying it outright for my members.
All right. So you're still making that call. This is the best trade of the year, and we got less than half the year left.
Well, I think it's one of them. I made money in this in January, and, I did it with a swing trade. I did it with options. It was terrific. Then I got stopped out on 2 other swing trades. And, that's just the nature of the business. Sometimes the markets will change and you got to be fluid and change with them. If you're not willing to do that as a trader, you just won't make it in this business.
Yep. Makes sense. Bloomberg Commodity Index, DJP. What are you seeing here in the commodities sector?
So this chart right now is still a strong chart, but the one thing you have to look at, if I may show you here, and we move over to a monthly, you're going to notice that this is very, very overbought and parabolic. You're also going into major resistance. I hope everybody can see that on my screen. But if you look at that, that was where you had a big bearish base and a breakdown. So I think this is due to stall out shortly. You know, could it be this week or next week? But I do think that the run on this is over for now. And you look at it again after a pullback of some sort or a major retrace. I think the price of this right now is 26.66. You know, just a natural retrace takes you down to around 21. So that's where I would, you know, look at it closer. And then when I see it, you know, come into a major support level, that would present maybe an opportunity on the long side.
GDXJ, one of our favorites to always talk about.
So this is the junior minor ETF. And one thing I will say is this did not have a great move during options expiration 2 weeks ago. And I never, ever like to see when something will actually sell off the way it did. So I think right now, when you look at the GDXJ, let me just get over to this daily chart, forgive me. This way you can see a little bit better. You had a major breakdown below all the moving averages. It still looks weak to me. You know, a level I'm going to get interested in this thing is probably going to be in the low 40s, but that's pattern pending. There was a lot of damage done 2 weeks ago during options X, and you can see right here, basically this brings you to around the 18th of June, and really since then it hasn't gained any strength. In fact, gold itself is still struggling right now, and you got to be very, very careful. And I've been a gold bull. I made a lot of money from March in the GDX and also in some gold miners, but this time around, I think you got to be a little bit careful with gold. It is not performing well at all right now.
Nick, we talk about how the gap ups always usually gap down at some point. Now we're looking in June here at that gap down on GDXJ. Do you expect that gap up to be filled?
Well, at some point it will be filled, but right now you still have a deceleration, or I should say distribution going on in gold miners, especially in the GDXJ. This is a bit more volatile. So, you know, things can change and these patterns can reverse, but at the moment, I'm just not seeing it. Even today, if you notice here, it had a nice big gap up. Here, and I'll flip over to an intraday chart to show you exactly what I'm talking about. Here you can see how this is just rolled over. And, you know, you got to be careful. It's not how they open, it's really how they close. And I'm not ultimately impressed with the action here. So I'd be very, very careful right now with gold miners, even silver, which I love. Now they're going to lead to an exceptional buying opportunity, but that's still some time down the road. And, you know, you just got to buy your time at this stage of the game.
All right, let's go to Newmont. NEM, this is the leader in the sector, Newmont Gold.
Yeah, so Newmont Mining, I think is by far the best stock out here. And what you'll see here for Newmont is that it has a very similar setup. Here's the big sell-off, and then it rallied up a little bit, tried to bounce, try to recover. But ultimately, this is a weak chart right now. You got to be careful with it. I think you'll get a trade probably around $58, maybe 57 in that vicinity. But ultimately, you got to see how it gets down into that level, because it's just, and this is the top of the crop. I mean, this is the leader of the pack, and it's not showing a lot of strength right now. So I would definitely be cautious with gold and gold miners, and, you know, always follow the leader, right? We follow JP Morgan and the banks. We follow Newmont Mining in the gold sector. And this is not a strong chart right now.
Let's look at a smaller gold producer, BTG. This is B2 Gold.
Yeah, so I looked at this earlier, and you can see how this is making new all-time lows. Unlike Newmont Mining, this is you know, a much lower priced equity. But overall, you got to be careful with something like this. This can go down easily into the low to $3 level. And, you know, that's when it gets attractive, though. Around the $3 level, this is where this is poised to get a pop. So I'd be a little bit careful with it at the moment.
Okay. Next one is a copper discovery company. That's FLMMF, Philo Mining. And I want to get your insights, Nick, on this one because this gapped up on a discovery. You know, they discovered copper, market got excited. You'll see that there. You know, just from a chartist perspective, I just gave you the fundamental backstory of why it shot up like it did. But talk to us about what you see here from a chartist perspective.
Okay, so you got a big parabolic surge here. Price went almost all the way to $10. Now it's come back down. It's putting in what we call a bear wedge. So you got to be a little bit careful at this stage of the game. I want to show you something though on a larger time frame. If you take a look at the weekly chart, parabolic move, tremendous move, but it's overbought, it's extended. Now we don't have a lot of data on this chart, especially on the bigger time frame, but anything that goes up and it looks like the Statue of Liberty, and it's holding the torch up here, take your profits off the table or put a trailing stop in immediately. This has gone parabolic. It's had an amazing run, but this is something that I would hold off on, and we'll let it tell us more. But I'd be a seller at this stage of the game.
As you've looked at junior mining stocks, like when they have a discovery and then the value creation is like instant and you get that massive spike where the share price goes up multiples literally in a week or two. I mean, do you see that, Nick, in your experience often? I mean, it's not going to gap all the way back down unless people conclude the project is a dud. But if they've really discovered copper, it's going to withstand, you know, going all the way back down. I mean, what would be your insights regarding this?
This is a little tougher chart, just generally because of its nature, right? If I look at, it's only been around since 2019, 2018. But generally, a natural retrace in the marketplace is about 50%. So I would never hesitate to look for a 50% retrace in something like this. It's a little bit tough, but you'll have support around the 530, 535 area. And then, you know, you go back down, maybe if you look at a weekly chart, which I'll pull up here, I would definitely think that, you know, you're vulnerable down to some of these moving averages. Here's 5, which is your 20 period, and then your red line here is your 50. So, you know, you could come all the way back down to the breakout point. And, you know, that's what happens sometimes with these smaller cap plays or micro cap type stocks. You know, you'll get those kind of retraces. They're not uncommon. They're, in fact, very common.
Okay, next one is BCEKF. This is Bear Creek Mining. This is like a bellwether stock amongst the silver juniors. That's why I'm asking you to take a look at this one to see where the silver juniors might be going.
Yeah, so right now, this has had a really good pullback. I see a lot of support around $1 or maybe a slight pierce, 95 cents. I think that's an attractive level, and I'll show you why. First of all, you had this big sell-off here, and then you had the reversal right there, back above that red bar. That tells me the strength is going to lie in there just around $1 or just a slight bit below it.
Okay. And is there anything we can extrapolate? As I mentioned, I kind of look at it as a bellwether stock. Does it speak to where silver might be headed? Like, how do you look at an equity like this and also couple with your analysis of silver?
Yeah, so I mean, I'm always going to look, I'm going to use SLV because everybody can pull up that. You know, silver's still holding up really, really well on a weekly chart basis. So I don't see silver, and I'm using the SLV ETF, but I don't see this really going below 21. I think 21 is going to be a very, very good opportunity for a nice bounce play. Silver looks strong still. It definitely has a lower high here. You got a little bit of an ugly bar in place on the weekly chart with that options X in June. So I think, you know, you probably see it trade down into this pivot right here, you know, which is around $21. And, you know, that looks pretty good. And, you know, when you look at that BCEKF, that tells me that got a little bit lower to go. 95 cents to $1 is probably your buy level.
Okay, let's jump over to lithium, LIT.
All right, so lithium has had, you know, an amazing run. Let's just call it what it is. This thing was sub 20. Now here you are at 75 and change. This is a weekly chart, by the way. Now I want to move over to a bigger time frame, and I'll show you a monthly, and it's parabolic. And this is, you know, went Statue of Liberty here, pulled back, which is good, and then it's going Statue of Liberty again. meaning it's Eiffel Tower move, it's straight up. So now I would be very, very cautious. If you own it, trail the stop loss. I would not commit new money to this at all at this stage of the game.
Okay. URA, uranium.
So URA is another play that's been hot for the most part, but it has recently started to correct. You had that really, really good run. I think there's a lot of daily chart support here at the moment. However, when I look at the larger time frame, and I'll pull up the weekly here, you'll see that if you take out this green bar and right here, you close below that on a weekly basis, this is going to correct all the way down to $15. 15 should give you a buying opportunity.
Okay, and then one of the key producers, CCJ, Cameco.
Yep, so Cameco now is very, very similar. Let's start out with the daily chart first, and just to show everybody. You had that top, and then you've come down, you're holding this moving average right here, but the importance of this right now is not so much the daily, it's more like we showed you on the weekly. If this closes below this green bar low, this is in some real trouble. I'd probably say a move down to 13, 14 is where it's ultimately headed. And, you can be a buyer in that area, but there's opportunities here. We don't, one thing people or traders got to realize, nothing goes up in a straight line. Everything goes parabolic at some sort. And then when the crowd loves it, you need to not love it and, protect yourself or even bet against it. And that's where we are at this stage of the game with some of these uraniums. But again, when you look at this daily chart, you've had a good little sell-off, so you might get a short-term bounce here at this moment.
FCX, let's head over to copper, Freeport-McMoRan.
Yeah, so this is Freeport Mac, and again, it's put in that really, really nice surge all the way up here, and now it's made some lower highs. So while I think there's definitely some support on the daily chart in play, the bigger picture tells us we're pulling back to around $25. That's where I would be a buyer of Freeport McMoRan. I still am in the camp that copper has put in a short-term top, but I don't think the commodity run is over. I think it excels again later this year or sometime next year.
All right, TECK, another big miner, TECK.
Yep, I know, I'm familiar with all of them. And, this is somewhat similar. I would not be a buyer of TECK. Let me show you why. If you take a look at your monthly chart, and this is pretty interesting, you're going to see that price had a great run up, but look what it's going into. All of this chart congestion here, this is where you had a peak around 30, came down, based, broke down. Too many people are holding the bag here and are now sellers here. And that's why Tech Resources is probably in stall mode. If you could see this get to maybe 17, 17 would be a nice bounce level. Okay.
Last one, Nick. I gave you a discovery hole in Philo Mining. I'm going to give you one that sold off downward, NAK. And this one sold off when it doesn't look like they're going to get their permitting for their big copper gold project up in Alaska, Northern Dynasty Minerals.
Yeah, this is a very tough chart to like right now. Let's move it over to the daily here first. And obviously you could see something went wrong there. And the stock now is getting hit pretty hard. Overall, it looks
especially
like
that December, November of last year, right? Back candling.
Oh, yeah. It just got absolutely demolished here. Made a little bit of a comeback, and now it's back down. The positive in this chart, and there's always pros and cons, the positive is that you have not gotten back down to where it was in late December 2020. So that's a positive. I would still be very, very careful with this. I'd almost rather see this make a move higher and then put in some kind of a bullish consolidation pattern before putting funds into this.
So and what about that August of last year where, the bad news came out and you can just see that gap down?
So you're talking about August of...
Yeah, you see that gap down?
Yeah, I'm going to pull it up right here. So right here, you had that monster gap down, and then you rallied up, and then you had another tremendous sell-off here. This was damage. but it was able to go above that red bar and close there. But overall, as you just pointed out, Bill, that gap is still very much alive right here as major resistance, but we're not even anywhere remotely close to getting to that gap fill. So you got to be very, very careful at this stage of the game.
Well, Nick, this has been a great overview and introduction to just how you size up these charts. Sometimes when I'm looking for advice, I'll just ask Nick, hey, give me your opinion on this little junior miners chart. So I find Nick's insights very helpful. Nick, anything you want to say about InTheMoneyStocks.com as we conclude?
Yeah, this is a very turbulent trading year. And I would tell everybody, get educated on the charts, get educated on the charts. In fact, next Monday, I'm going to be holding and hosting an intro to technicals. So if anybody wants to come over, just go to In the Money Stocks, look at our free page, and you could sign up there. And it'll just be about an hour and maybe 90 minutes. I'll do an intro to technicals, but you'll learn a lot there. It's free for everybody to attend. And again, just get educated. This is a very tough trading year. 2021, I called it the year of trading dangerously, I believe, back in December when we did an interview, and it definitely has been. It's been a challenging year, even for me. And anybody that doesn't know much about technicals, get educated, because it really, money flow is everything. It's the footprint of human nature, and it tells you everything you need to know on the charts. Now, there always could be a news item that pops a stock or drops a stock. But overall, if you could trade with the trend, it's going to help you a little bit. And if you could find where the big major resistance and support levels are, that's really the name of this game. Excellent advice. Well, your website again is InTheMoneyStocks.com. Link to that in the show note. Nick, thanks for coming on the show and sharing your insights today. Thank you, Bill.